Hello and welcome to XpoNorth session on making angel investment more accessible for women-led businesses. I'm Joan Johnson. I'm the Fashion, Craft and Textiles Advisor for XpoNorth. And for those who don't know XpoNorth, we support creative industries in the Highlands and Islands of Scotland. I'm absolutely delighted to have Gillian Harding of Mint Ventures with us today. So Mint Ventures are a women-led angel investment group supporting diverse teams in the underrepresented sectors, including creative industries in Scotland. So when we talk about growing businesses at various stages, inevitably there's times when you need to look at some form of investment. So that could be from through the bank or through friends and family, etc. But also you might also want to consider equity investment through external sources. And one of the issues, there's lots to understand about that. So today we've asked Gillian to come and explain the process, but also talk about the work that Mint Ventures do, particularly around supporting women entrepreneurs. So I'm going to hand over to Gillian. We are going to take questions and answers at the end. So if you'd like to pop any of your questions into the Q&A box, we'll go through those at the end of Gillian's presentation. So I'm going to hand over to Gillian. Thanks very much, Gillian.
Thank you, Joan. Absolutely delighted to be here today. So thank you very much for the invitation. So yes, today I'm going to talk about angel investing in general and what the ethos of Mint Ventures is, and how we're here to support women-led and diverse companies grow and scale. So I'm just going to do a quick overview first of all as what we are going to be covering. And so in the next sort of 45 minutes, we're going to look at the landscape, specifically some of the challenges around women-led companies. And then I'm going to go on to talk about what really is angel investing. What would an angel investment deal typically look like? What are the elements? What fears may you have around that? And then we're going to look onto the side of angel investing. Why do angels actually invest? And how can you potentially become a business angel? So without further ado, I'm just going to jump straight into that. Just a little introduction to myself first. So my background has been in this startup, scale up and also university spin out sector for many years. And I've worked with all different teams across a multitude of different sectors. And I suppose you could say that I'm kind of a gamekeeper turned poacher, in that I used to help and support companies transitioning from a project into a company. And now I'm on the other side of the fence where I help them. I actually raise the investment to invest in the companies. So at the moment, there are some challenges around the funding landscape for women entrepreneurs. And this is part of the ethos and basis for Mint Ventures being created. So at the moment, women do actually ask for less capital when they're looking to grow and scale their companies. But they do actually start their companies with 53% less capital than men. And that's largely because they maybe go without salaries for a long time. And they also do a lot more in kind in general and find ways to do things in kind. However, what is a very stark statistic out there is that only 1 penny in every pound of venture capital, and I'll come on to explain that more shortly, goes to women-led companies. And coupled with that, there are 51% of the world's population is women, and yet only 12% of women are actually angels within Scotland. It's 14% within the rest of the UK, still a very, very small figure. And women working in venture capital making the decisions is only around 10%. So there's a lot of change that needs to happen there, and that's part of the raison d'etre for Mint Ventures. But what's also reflected in that is that the sectors that are really being underfunded tend to be the sectors that women are more likely to set companies up. And that, of course, includes creative industries as one of the big sectors here. And we're really keen to invest in companies that come through the creative industries sector. Some of the other sectors that we're keen to support, which are typically underfunded, are also the retail sector, food and drink, health and well-being, and lots of different marketplace technology that could be anything from fintech to government tech, but some kind of marketplace technology. The other stark statistic is that even on a global basis, only 3% of equity investment globally goes to women founders. It's a very, very small amount. And there are lots of new angel groups and venture capital groups that are being developed now to help address this, along with the Rose Review that Alison Rose from NatWest Bank has been leading, which is just bringing this data together so that we can understand what the challenges are in this sector. And one of the biggest challenges that we need to unlock this is to provide more access to capital for women-led companies. So some of the myths that we would like to bust are out there, that women are not risk averse. We just have a different attitude to risk, and that we do things a little bit differently. We might take a bit longer to get there, but when we do make a decision, it's likely to be a very innovative decision that is going to make an effect on the company's ultimate success. It's not that we lack ambition either. It's just that we do things a little bit differently, as I've already mentioned, with our attitude to risk and giving more in kind. So there's lots of different ways to achieve the same goal. And coupled with that, there is conscious and unconscious bias that takes place when investment decisions are being made. So that's a quick reflection on the kind of current funding landscape. So let's just delve down now into what actually is angel investing and how can it help you and your company to grow and scale. So I think the easiest way to think about angel investing is that you are selling shares in your company in return for capital. So it's like unlisted stocks and shares trading, very early stage stocks and shares trading. And angels are typically private individuals that either invest on their own or they join angel groups to invest, and they put their hands in their own pocket and use their own money. In addition to that, angels usually provide some kind of expertise. They want to help and support the company. We're all in this together, so they might be able to help in a number of different ways. Could be with some of their professional expertise. It could be opening doors, making introductions. We'll go into this in a bit more detail later. But one thing that I thought would be really of interest to this audience today is that angel investing was actually invented in the creative industries. And the history of angel investing is that it was developed by Broadway theatres. That's where the term angel investors came from. So many years ago, when they were putting on new productions, private individuals would come forward, lend them the money, and then once the film or the production was actually revenue generating, they would get their money back with interest. And that is the history of angel investing. And nowadays, it's more about you invest the money and you don't get your money back until the company actually gets further funding. And I'll go through all the different ways that you can get your money back as we go along. Another thing that I would like to say about angel investing and the definition of angel before I go on to talk about all the different types of funding is that many of you may watch Dragon's Den, and Dragon's Den is essentially angel investing, although they're all dragons and not angels. And of course, one of the most well-known and successful dragons at the moment is Sarah Davies, who is a crafting dragon. And we're really keen to see more investment in these types of companies, the creative sector. And I think Sarah's a great example of how successful your company can be. So what are the different types of funding in addition to angel investing? So of course, many of you probably are growing your companies through revenue. So, that might take you a lot longer to grow and scale because you've got revenue coming through, regular monthly revenue. And how do you grow that and make that, 2, 3, 4, 5 times One of the ways you could do that is applying for grants. There's lots of grants available that are sector specific. You probably work with Highlands and Islands through all the grants that they have. But usually you find with grants that there is some element of match funding required. And angel investing can be that match funding. You also could, of course, go down the friends and family route with your begging bowl and ask for help and support, which often meets the 30% match funding if it's a 70% grant, but it very much depends on the grant. Another way that you can raise finance to grow your company is crowdfunding, and there are many different types of crowdfunding. We probably need a whole session on crowdfunding, don't have time to go into that today, but the one that we tend to see happening the most before companies approach us for angel investing is that they've maybe gone down the donation type crowdfunding. So that's where you get people giving you money, they're not expecting anything back, it's small amounts. You maybe give them a token gesture back, invite them to an event, or give them a t-shirt, but they basically are giving you money to support sort of your very, very early stage, maybe £5,000 up to £20,000 or so. You, of course, can go down the debt funding route. I know that's extremely difficult to get a bank loan in the very, very early stages of your company. There's also other types of debt financing and advance financing raised on your purchase invoice as well. So there's lots of different ways that you can do that now. And also, if you happen to join an accelerator program, and there are many wonderful accelerator programs out there nowadays, sometimes there's a little bit of funding given through that. So it's like a sort of type of equity funding that comes through the accelerator, or indeed the incubator that you're based at. And then, of course, there's angel investing, which we're going to go and talk more about now. I should also say at this stage that the real difference between venture capital equity investing and angel investing is that venture capital is a managed fund. So it's usually somebody managing other people's money, whereas angel investing is private individuals on their own coming together, clubbing together. But at the end of the day, one of the key things that angel investing can do is enable leverage. It can enable that leverage to get some of these larger grants that might be out there. And also, you may well start speaking to angels at an early stage, but you decide that you don't really want to do it right now. You might do some of these other options I've just discussed. So angels are very aware that they're quite often plan B, and they're okay with that too. It's okay to speak to angels and say, well, it might be 1.5 years, 2 years, but I'd like to have these early stage conversations. So what are the reasons that you might consider angel investment? Well, you're looking at capital to grow the business, and that could be a number of ways. You maybe want to go into new markets. You maybe want to set up an online platform to sell more globally. There are a number of different ways that you want to expand, bring more team members on board. You want to do things faster and quicker, meet bigger orders, bring on new customers. There are so many different reasons that you might want to consider capital to grow your business. But I guess the key thing with angels is that they can also bring what we call clever, smart money, where they've got skills and expertise that they can bring to you. And it might well be that you're looking for somebody with financial expertise or legal expertise. We quite often find contractual expertise is a big one that angels can help with. And they can also help with mentoring and coaching. So they can be that critical friend that you phone up in a time of need when you're having to make some strategic decisions that were maybe unplanned or not forecast. So really good for mentoring and coaching. And also where angels can really help is on the board. And you will find that if you do take on angel investment, you will more than likely have either an observer or a investor / non-executive director on your board. And where they can really help is with your compliance and governance of the board and the company. And the compliance, of course, is where you're doing the right things, where you're doing things right, and governance is where you're doing the right things. And many angels are really experienced in board governance, and it's a way of bringing on very aligned people to your board. It also helps you provide accountability and credibility as well. So when should you not consider angel investment. And I think that if you've got a company where you want to be your own boss forevermore, you don't want anyone else involved, you're not really looking at scaling, you're quite happy, ticking along at the current level, then of course angel investing is not something that you should consider. So I'd like to talk a little bit now about some fears you might have as the founder of the company. A lot of people often ask, well, what about dilution of authority? Do I have to report into other members of the board? Are they going to interfere with the decision-making process? And just to be really open and transparent about this, yes, you're going to have other people involved. You're going to have other people helping you and supporting you with your company's strategy, but it's not essentially a dilution of authority. It's about bringing the right skill sets around you to help the company grow faster and bigger. And almost if you can do a SWOT analysis on yourself and think, well, what am I good at? What am I not so good at? What could I do with help and support at a strategic level? Then that's really going to help grow the company. In terms of it being time consuming, what is time consuming is the raising of investment. I mean, that will take time for you to do that. We always advise a minimum of 6 months to raise investment. Hopefully it won't take as long as that, but it does involve, preparing of documentation, which we're going to come on to discuss. And in terms of it being costly, there will be legal fees involved in any angel investment deal. But certainly Mint Ventures' ethos and many of the 22 angel groups in Scotland's ethos is that we all want to keep costs as low as possible. That is our objective. And for that reason, we have an umbrella organisation called Link Scotland, and Link have produced standard templates of all the legal documents required so that we can keep legal costs down. So now to have a look at what is required as a founder, what do you need to do and what tools do you need to raise angel investment? So we talk about the 6 M's, we sometimes talk about the 6 P's, it's basically the same thing. You're looking at the markets, the matter, the product, where are you going to go, how are you going to grow, what milestones are you going to achieve, where the management team going to be, and what funding or money do you require? And then we talk about something called an exit plan, and that is basically how are the investors going to get their money back. Angel investors are in it for the long term. They understand it could be 5 to 10 years before they get their money back, but what they'll be looking for is for the shares to grow, the value of the shares to grow, and then at some point further down the line, and we'll come on to talk about different exits, they will be able to get their money back. Maybe when you bring in other funders, maybe you float on one of the stock markets, but we can discuss that further along in the presentation. You will also require to have an overview presentation and as well as a business plan that contains all these elements we've just mentioned. So some kind of outline business plan, and then that can progress into some kind of presentation where you can talk for 5-10 minutes about what it is you're looking to do, and I'll go through what the key criteria that angels are looking for. We also do look, many angels look for a willingness for you to be coached or mentored. That's quite key, that you're looking for support and help. And ultimately, we're all looking for that burning desire to succeed. So yes, what are angels really looking for? So this is one of the key questions that we always get asked, and we try to be as open and transparent about it. You'll hear this referred to as angel investment criteria, or sometimes the word thesis is used. We're trying to democratize that and talk about it in plain English. So really, this is the criteria that they're looking for. And the number one, at this very early stage of investment, which we call seed funding or sometimes pre-seed funding, it's where angels typically tend to invest. It's all about the team. It's all about the people. What we're really investing in is you, the founders, and your board of advisors as well. The second thing that we're really looking for is, what is your product or service, and what is the fit with the marketplace? So i.e., what are you selling and what is the demand for it? Is there really a need for it? Is this replacing something else? Are you just doing it slightly better? How are you doing it better? What are you offering? And then we're also looking to see what customer traction have you got. So if you're not already selling a service or product, if it's what we call pre-revenue, what validation do you have from potential end users? Do you have some letters to state, some emails as to state that, if this was available, they would buy it? Are you speaking to key influencers in the process? Have you done some market research? Have you done a Survey Monkey and you have a very independent report? People would be interested in this. So that's what we're looking for. How scalable? How can this grow? Is there a large potential market there that is going to enable the company to really grow? We would probably look to see a minimum of 5 times returns. Some investors look for 10 times returns, probably more at the venture capital end of the scale. But we'd be looking to get back 5 times our returns in 5 to 10 years. So there has to be that significant market there. The other part that's really key for us is how do you differentiate from your competition? What are you doing differently or better? And what have you learned through your running of your company to date? Of course, we will look at the business model. What are all the different revenue streams? How could you expand that? Is there a way you could be selling data that you inadvertently are maybe tracking through your website? Is that useful to somebody else? So we'd look at the business model and all the different revenue streams. And of course, we'd look at what we call intellectual assets, which is really your know-how, mainly your know-how. You may have something that's protectable as well, such as a trademark, design right, particularly in the creative industry space, or copyright. But generally, the most focus is on know-how. What do you know already that your competitors don't know? And what brand value have you developed as a result of this? And altogether, looking at this holistically in the bigger picture, how you respond to all these questions is really important to angel investors as well. To be eager and keen and thinking outside the box and, driven is what we look for when we're going through this process of bringing all the information together. So to talk a little bit more about the actual process itself, we've talked about the toolkit and what we look for. So once you've got the information together, or you're in the process of pulling it together, you've maybe got an outline business plan, you know the direction of travel, and you now want to understand what the process is going to be. So normally you would submit what we call a pitch deck. It's your presentation. You would submit that to angel groups once you've actually had some introductions. We'll come on to that later. And if it meets their criteria, it's you need to do your research and make sure that if you're approaching an angel group, you are meeting their criteria as the first step. If it meets the criteria, it usually goes to an investment committee. And then if it then passes that stage, you're usually invited to come along to the next angel group members meeting. It's probably useful to see here that an angel group operates a little bit like a club, so members vote. Quite often the investment committee is actually the members group. So once it's been through an initial first pass by the gatekeeper of the club, or the head of the club, it's then given to the members, and the members vote to see whether or not they'd like to meet the team. And then if you're invited into a members meeting, you present to the members, and then there's a Q&A session, and then a vote is made by the members after you've left the room, whether they want to take it further or not, and whether they might want to invest. And then it's followed up individually with the group leader to find out how much each member might want to invest. And then it will go through something called the due diligence process, where we call it detective work. And that's where essentially we're checking that everything you've told us stacks up. So, and we'll look into the company history, we'll look at previous accounts, all that side of things. And we'll also maybe speak to some of your customers too. And so that's what we call the due diligence process. And while that's going on, we will issue, if we're interested, something called the term sheet. And the term sheet essentially just lists the heads of terms under what we are investing. So it will be the offer in terms of the valuation that we need to come to agreement on, that we may make an offer, you may come back with a counter offer. And usually these term sheets are valid for 30 days. And and then negotiation takes place to agree on the heads of terms. Often what we see, particularly in Scotland, because we have a great angel network that works really well together, we see a lot of co-investment deals where there might be several different groups of angels. And when that happens, there's always a lead angel group, and it's the lead angel group that will issue the term sheet on behalf of all the groups of angels that are involved. We're also very lucky within Scotland to have a co-investment fund with Scottish Enterprise, and that can really help leverage additional money if you indeed qualify for the terms and conditions of the co-investment fund. But another thing to remember is that at the end of the day, the individual angels are making their own their investment decisions. This is not a group decision. It's a group discussion, and then each angel makes their own investment decisions. So valuation and equity, this is always a hot topic, and I always get asked, how much equity, very roughly, will you need to sell in order to raise angel investment? And as a rule of thumb, and this isn't set in stone, is you're expecting to sell between 20 and 30% shares in any investment round for angel investment. It may well be that you will need several rounds of investment. You may start off with a small amount, and then as the company grows and scales, you realise there are significant opportunities and that you'll need further money to do so, to leverage that. But we usually, as a rough rule of thumb, we're talking about 20 to 30% of your shares. It is a numbers game. The valuation and amount of investment is very much a numbers game. So valuing the company there is a lot of controversy around this, and early stage valuation is very much based on the product, service, the stage that it's at, the stage of development it's at, what know-how and value you've already created in the brand, and really, most importantly, the credibility of the team. So that's what we look at in order to value the company. Often the company will come to us with a value first, or it might be the other way around. We'll issue a term sheet and say what we think the value of the company is. At the end of the day, we all come to a reasonable agreement on what the value of the company is, and then we are aligned to grow and scale the company together. So how might you find a business angel? This is something that is particularly difficult for women entrepreneurs, and Mint Ventures has acknowledged this, particularly because we have been born out of Women's Enterprise Scotland, and we have a lot of statistics and research, being policy work that has been carried out as to access to finance and access to warm introductions is particularly difficult for women to start looking for angel investors. And I always say that just ask for introductions. Look at your LinkedIn contacts and see maybe who knows who, and don't be afraid to ask. People are really happy to make introductions to support and help you. So do ask for introductions. There are 22 angel groups in Scotland, and as I mentioned, Link Scotland, you can go onto their website and find them all. But equally, there are lots more groups in England as well, and Wales and Ireland, that might be more fitting with the creative industry sector. As I said, it's a sector that's not standard for investment. Most of the angel groups in Scotland are very much interested in the high growth technology and science type sectors, but things are changing. New sectors are being investing in with the pandemic and the digitization of all industries. A lot more companies are becoming more tech specific and therefore potentially more investable. So do your homework, have a look, see who's investing in what, And then, you know, make sure that you're matching, as I mentioned before, the investment criteria. So if you're going to send an email or you're going through their online application process, make sure you mention how you fit their criteria. That's really, really important. Often as an investor, I see emails coming in, and I'm always really impressed when somebody actually talks about a company we've already invested in and what the synergy is with that company, with your own company. And it could well be that that company could be a supplier, or you could be a supplier to them. But it's always good to see that, you know, that you've done their homework and you really understand the sectors and the different stages you're investing in. You may also get referred. You know, if you're part of an accelerator program, you might get introduced to angels that way. You might get referred through some other, you know, grant program or whatever you've been working on with your company. And some of the, I know that some of the business gateway areas also have events in this area to help get you ready for angel investment. Cannot emphasize enough how much alignment is key. The amount of companies that I have worked with over the years where maybe there's been a bit of friction between investors, and I'm talking more about the VC end of things rather than angel investing, is always around alignment. There has to be alignment of what the company is doing and how that matches with the angel group or the venture capital firm. And that, of course, goes for the board as well. You know, having the board all pulling in the right direction, having the right expertise and the right advisors around the table. If you don't already have a board, and it may well be something you've not considered at an early stage, my advice would be, if you are going to raise angel investment, that you do find an advisor or two to bring on board to demonstrate that, you know, you are looking to see who can help, and that you are maybe moving towards more of a governance board, which will be certainly required when you seek angel investment. But bringing on advisors, and you can bring them on in kind initially, with the prospect that once the company is funded, then that will become some kind of funded role going forwards. So do consider how you might add expertise through different market sectors and different professional skill sets in terms of advisors. So I want to spend the next sort of 5-10 minutes having a look at why angels invest, what's in it for them, why do people become angels, helps understand the other side of the fence. It might be something you potentially want to do one day. We do find that a lot of angels have previously been entrepreneurs, and they've scaled their company, grown their company, exited, and then they have money to invest. And of course, they also have the experience, they have the journey to help advise startups and SMEs with their journey. So the number one reason, and these aren't in any particular order, but the number one reason that angels do invest is they are looking to get money back at the end of the day. But there's also fantastic tax reliefs that's not really very spoken about, and I'm going to come on to discuss that. It's also great fun. It's also great fun being an angel investor. You meet like-minded people, and it's really interesting. It's really rewarding. And then the other great element of angel investing is you can roll your sleeves up and get involved as much as you want, or you can be hands-off and really just be more about making connections and giving the capital over. But there is a philanthropic aspect to it, and a lot of angel investors really enjoy the giving back and you know, giving back their time to support other companies on their journey. So this is quite a complicated area. We actually have a whole session on this for our Mint Ventures members. And so I'm just going to skip over the top level of what the tax breaks are. But essentially, there's two schemes within the UK. Within Europe, the UK has the best tax breaks for angel investing. And there are two schemes. One is called the Enterprise Investment Scheme, and the other is called the Seed Enterprise Investment Scheme. And at the very early stage, you know, within the first, I think it's 3 years or so of your company, you are eligible for the seed scheme. SEIS as we call it for short. And that allows, if your company is, what happens is the entrepreneurs have to apply for this. They have to get advance assurance for this. And if you meet the criteria, where I think you have to be developing a new product within certain sectors, there's quite a lot of criteria that you have to go through to meet. But it's a fairly simple online application process. It means that your investors get 50% of the money they invested back. And it's a really straightforward process to get that money back as well. It's just one piece of paperwork that you fill out after the deal's completed. You can also defer that and have it in different tax years, but essentially you're getting half your money back if indeed you qualify for SEIS. The onus is on the company to qualify. The second scheme, which I think covers up to 7 years, and there are exemptions from this in terms of depending on the sector you're in, you can apply if the company has been trading for more than 7 years, but essentially you're looking at getting a 30% tax return if you are an investor through the EIS scheme. And sometimes we find that in the deals that we're involved in, both of these, you can be valid for both of these, and there's sometimes a hybrid between the two, because of course you can only have up to a total of 150,000 in the SEIS total, albeit one individual can invest up to £100,000 under this scheme. The total for the company is £150,000. So, and there are added benefits for investors in that, if they've got capital gains tax, they can write off capital gains tax. They can reinvest the money made in capital gains tax into angel investing and not have to, they then have an exemption. And also the fact that if you do eventually sell your shares at a loss, you can offset this again against capital gains tax. So I don't want to go into that, into bombard you or confuse you on this, but essentially there are two great tax schemes there if your company is valid to apply for them. So investors, how do they get their money back? The main way they get their money back is if the company is eventually sold on to a larger organization that's maybe looking to diversify into the area that your company is in. Now, that doesn't mean that you necessarily are no longer the managing director or the CEO. It just means that you're owned by another company that's maybe going to streamline supply chains and processes, to save money and to help the company make more revenue. So trade sale is what is the biggest way that we see money coming back to investors. There's also the fact, as you go through different funding rounds, it may well be that a bigger investment company comes in and then buys out the angel investors. So that would be another way that the angel investors get their money back, maybe slightly earlier if there's a larger funder coming in. Of course, you can also float differently on the AIM stock market, or of course on the main stock market, and we would refer to that as an IPO, and that tends to happen much further down the line if indeed you are lucky enough for that to be your exit strategy. So as I mentioned before, it's about it being, fun and interesting. Certainly within Mint Ventures, what we very much encourage is meeting other like-minded women. We don't exclude men from Mint Ventures, but it is a real focus on women building their confidence and meeting other women. And there's very much around peer-to-peer learning. We help teach how to mentor, coach and advise companies, how to help with their board governance. It's also about expanding your own personal networks if you become an investor as well, and also about your transferable skills. Very much what we do at Mint Ventures is about taking what you already have, and everybody has transferable skills if they've worked in business at some point, and it's about building them and developing them and seeing how they can be made use of in the scaling and growing an SME or a startup. But we always caveat that with everyone should only invest as much as they can afford to lose, because angel investment is risky. It's a high risk asset class. It is risky. And that's why we always advise making several investments and having a portfolio of investments. So how can you become an angel investor? There is a complete myth out there that you have to be rich to angel invest. That is not the case. And this is part of what Mint Ventures educational programme. We have been doing a roadshow around Scotland. We actually hope to get further north up to Inverness later this year. We've been to Aberdeen already, and I'm actually going to be speaking in Elgin on Monday coming, at the Association of Scottish Businesswomen. But we're trying to get the message out there. There are two ways. You have to sign something called a self-certification to become an angel investor. And there are two key ways you can do that. One is that you are a certified what we call a high net worth individual. And that basically means you have a net income salary of over £100,000 a year, or you have net assets, not including your pension and your home, of £250,000. But the other way that you can become an angel investor is through self-certifying as a sophisticated investor. And that might well be that you've worked in the investment sector. That's how I fell into it. I found out that I could self-certify that way. But it also could be that you've been the director of a company that's had turnover of more than 1 million. But the lesser known way, and the way that Mint Ventures are trying to encourage more, particularly women, to become angel investors, is that if you join an angel group and stay with the group for 6 months, you can then self-certify as an angel investor. And during that 6 months, we offer a really structured training program to ensure that you have all the tools equipped to become an angel investor and to analyze opportunities and make your own investment decisions. How much time and money is involved? Well, we at Mint Ventures have brought the investment amount, what we call the ticket size, down to £2,000 per deal. And of course, if you get SCIS on that, it's really only £1,000. But we are trying to make it more accessible to come and build confidence and learn how to angel invest, to do a few deals. Roughly takes an hour or two a month to train with us and to review opportunities. We have online training to support that as well. So you can be as hands-on and hands-off as you like and get involved. But we do really understand that women are often the main carers in the family, both ends of the scale. And, you know, we have to consider time considerations. We try to have our events at user-friendly times in the evenings so that we can get as many people attending as possible. So to summarise, to talk a little bit more about specifically what Mint Ventures are looking for. So we're looking for companies that have a product or a service that meets the needs or interests of women. We're also looking for it to be really, but we're really focusing on the underrepresented sectors that I mentioned at the beginning, and that very much includes creative industries. We look for there to be at least one woman in the leadership team or on the board. We want to see that diversity of thought that has been proven for successful innovation, and that is one of our key criteria. And we also, very importantly, look for the company to have either a social, ethical, and environmental purpose, and to be able to demonstrate that clearly to us. We found from our research that that really is what women are looking to invest in. And also, as I mentioned, eligible for the tax relief. That's not absolutely essential. If you don't meet the criteria, we will still consider if you meet all our other criteria. I've already mentioned the other three about potential market return, 3 to 7 years, willingness to be supported, and in terms of the amount we're looking at this really what we call early stage angel investment. So between £50,000 and £250,000 is the size of the deals that we're looking to invest in, and we're happy to co-invest. It might not necessarily all be Mint Ventures in that amount, but that's the kind of stage of funding that we're looking for, early stage seed funding. And the other thing that we do a little bit differently as well is that we certainly don't make you pitch to us. We think there's far too much focus on pitching skills. We're not investing in your pitching skills. It may well be you have another team member that's better at pitching skills. You come along and you have a chat with us, and there's no set format. no set format, no pressure. We don't want any pressure put on anyone. You just come along and have a chat about your business plan and where you're going, and then you take it from there. If you know of anyone that might be considering being an angel investor, or you yourself are considering being an angel investor, now that you've heard you don't have to be rich to angel invest, you can come and join Mint Ventures for 6 months to train, and then you can self-certify and sign the forms that I mentioned previously. Our training program covers angel and fundamentals of angel investing. We cover opportunity analysis, we cover the tax benefits, we cover board governance, mentoring and coaching, and also we cover portfolio management. And we also have other events on. We have inspiring women events, and we have our members meetings, and we have social gatherings. The annual fee is £495. So finally, just wanted to sum up before I hand over to the questions and answers, is that we would be so grateful if you would spread the word with women in your life. And we have a free taster course, because what's really important for our members is that you understand what angel investing is, and then you make your own personal decision. So we've got a free taster course. I'm happy to send that on to anyone. It may also be useful for entrepreneurs, because it does cover all the aspects of angel investing. It takes about 90 minutes, but there is a lot of information on our website, and I'm sorry I don't see the Mint Ventures website on there, but it is mintventures.co.uk. There's information for entrepreneurs. There's a whole section there that helps you understand what's required, our criteria, and there's an online application form is there as well. So I'm very, very happy to answer any questions. Over to you.
Thank you, Gillian. That was excellent, really clear, and that taking us through the understanding of what Mint Venture does and the process, and also for anyone potentially interested in joining you as an investor. That's really useful. I'm just going to put it out to the audience. If you want to pop any questions in the Q&A, we can ask Gillian from there. And from that, I've just got a couple of questions as well. So one of them is certainly around that stage of investment, and I guess people never really know how much they need until they need it. And obviously you've mentioned that 6 months, the process, and also the amount that they're looking for. Could we maybe just talk a little bit more about that in that process? So that's obviously applying, making contact, and then going through that different process. So what if somebody also, in terms of that process, they're looking, let's say, a figure of 200,000, and they, from presenting to yourselves, gone through the various months, they realise that actually they've maybe got potential for 100,000. What would you be suggesting they do to build that portfolio of other investors to come in to make the total that they need?
Okay, so first of all, I'll maybe talk about changing amounts and what happens, and then I'll come on to talk about getting other investors involved. Yeah. So sometimes what does happen is, say you're looking to raise 200,000, but you don't quite meet that. So maybe you get a couple of investors on board and say you get the 100,000. So what would happen in that case is we would go back out and say, well, what can you do with 100,000? Because obviously your business plan that you originally submitted was around the £200,000 and the milestones that you're going to achieve, the criteria that you're going to achieve with that £200,000. So we would ask the company to say, right, okay, well, let's look at where would £100,000 take you to? Is there other ways that you could maybe match that with grant funding that you hadn't previously considered? And then, of course, we would use our networks, which we would do so anyway. So if you had come to us and, we were really keen to invest, we would pass on. So we would share within like-minded other angel groups where we feel there was synergy. We would then share your information, with your permission, of course, with those other angel groups to try and bring on the right investors. But the onus really is on the company to do that, to really think outside the box And that's why I said at the beginning, this can take quite a lot of your time, and just be prepared that this can take quite a lot of your time once you've decided that you're going down this route, to keep approaching angel investors, and not to get disheartened, because you will get lots of knockbacks, and that's just the nature of angel investing. It's about making sure that you have got that right message and that you're hitting the right notes with those other angel groups. So for example, it could well be, as I mentioned, we look at social, ethical and environmental, and nowadays there's a lot of what we call ESG investing, and that's economic, social and governance. And there's quite a focus now on the governance of companies, and a lot of investment companies are now using ESG criteria to filter and analyze companies, and also going forwards they want to have these as measurable goals. So it may well be that you would be aligned with another ESG investor. So I think the more you can be aligned with your investors, you hit the right notes, you're more likely to get that first step in the door and be able to present to them and then get them on board.
Great, thank you. And I guess from that, it's also for a company at that early stage to think quite broadly about where the investment might come in. So they may go to one or two groups and then find, as I say, that doesn't necessarily make the total amount that they want. So would you encourage people at a very early stage to be talking to a number? It's just, if you don't know who to talk to, it's starting that ball rolling.
Yes, I mean, I would encourage you to cast your net far and wide initially, and prepare a list. I mean, when I still do a bit of consultancy and help companies raise finance that are, not falling within the Mint Ventures criteria. So some of the more high growth spin-outs coming out of universities. And what I always do is prepare a spreadsheet, and I list all the investment companies that we're going to approach, try and find out their contact details. If you don't have that, then you can find that somehow by getting an introduction. And then I list the sectors, their key criteria. So I list that. And then I list, when I've sent them, what I've actually sent them. So if I've sent them my presentation, or if I've sent them the business plan, and I've got that kept in a spreadsheet, so I know where I am and when the next call is and when I'm going to chase them up again, and if I've not heard back from them. So I would recommend that you have some kind of communication plan like that, so you can keep track and you can keep monitoring it. And also going to events is really, really helpful, because there's angels love attending events. They're really sociable people in general, especially the gatekeepers of angel groups. That's what they love doing. They love meeting, they love hearing about new ideas, they love meeting people. So if there's any events coming up in your local area, that are related to, angel investing or new technology or new company development, then hopefully you will be meeting some angels at these events. So I would advise you to really get out there.
Excellent. And I guess one of the things you touched on too in the presentation is important, is it's not just about the funding, it's about the connections that those investors can bring to your potential business, depending on what you're after. Some people might want relatively silent investors in the sense of they want the money because they know what they're doing and they're going. But there may be others who are looking for specific investors who may be able to help them with their expertise, with their industry connections. And you mentioned that sort of mentoring, coaching. Is that, obviously that's quite specific to Mint Ventures. Do you find that in other angel groups as well?
Yes, absolutely. I mean, that is the nature of angel investing. That it's all about helping bring the right people around the table to grow your company, and it's all about being aligned with the right people, the right skill sets. I mean, often, I suppose, to give you some examples, a lot of the companies that I've been involved with that have raised investment, we've recruited great chair people through this. We've in some cases recruited. I'm just trying to think in terms of the nature of the business. So, for example, there was one board that I worked with that was externally invested, and they brought on somebody that was really understood the the life sciences CRO element side of things. So somebody that had worked in that industry previously and knew how to speak to those companies, knew how their adoption, their sort of technology adoption worked as well, you know, and the different levels of people that you require to speak to. So all the stakeholders that need to buy into technology adoption, you know, they totally understood that process because they previously worked in that area. So that kind of thing, you kind of map on the skills and expertise. And also more recently, in terms of just commercial contractual negotiations. So I was working with a company that was looking to expand into the Middle East, and this was in the power generation industry. This is not Mint Ventures related, in case you're thinking, what on earth are we doing investing in the power generation industry? And we ended up bringing on somebody that had super experience of working with the direct network operators and understanding how you sell into the national grid, and how you negotiate those, more importantly, how you negotiate these contracts. So it was all about, you know, pushing back with some of these large corporates who will want to just buy everything and own everything, and then it's really difficult for you to develop the technology going forwards. I suppose I'm giving more of a science and technology overview here rather than an SME overview. But in terms of an SME, I mean, simple things such as you don't have any legal expertise, perhaps. So perhaps somebody with a legal background that can help you with things like, you know, simple contractual, you know, even your HR side of things as well. You might want somebody with HR background. That's one thing that we see at a really early stage as well, is founders don't really have time to set up the HR policies, and you know, it's easier to bring somebody on board that can do that or help with that. And quite often you would find that might be a way of bringing an angel investor on board that has that expertise as well, just to get you started up, not run the whole thing, but strategically, and bringing your business plan down into an operational level and what's required to do that. That's where you can get help from angel investors.
That's great. Thank you, Gillian. We're actually coming to the timing. We've just got 4 minutes left. There, just on the HR issue, for anyone who's watching right now, there will be a session starting at 11:15, highlighting the support around HR and what can be done for small businesses too. Christine's just asked a very quick question here. We've just got literally 2 minutes to answer it. If one is a good idea and it would be profitable, how quick is the turnaround for the money to be available for the project?
So, I mean, angel investors can move quickly if need be. But, you know, several months, by the time you do all the negotiating with the legals and the heads of terms, and that, of course, translates into your updating your articles of association, your shareholders agreement. I mean, some angels can move really quickly, but it really depends on how the legal negotiations go. So I would always allow, you know, minimum of 2 to 3 months to raise the money, but always allow the 6 months. And one other thing, sorry, just very quickly, on the point of bringing in different types of investors that can help and support. There are now some investors that will take equity share. So rather than charging money or you actually selling them shares, you say, for example, you wanted to develop an app, you know, you wanted to digitize some element of what you have. There are some accelerator programs / angel investors that will do that for you in return for taking some equity in your company. And that's maybe something that's more relevant to this sector.
Excellent. Well, we're just about to run out of time. Gillian, I'd like to thank you very much for your time today, and delighted to hear you're coming to Murray as well on Monday. So we'll see you again there. But thank you very much for sharing this. Obviously, your contact, you can be reached through mintventures.co.uk. And we look forward to hearing about some of the projects they're going to be supporting in the future.
Thank you very much indeed. It's been a pleasure.